Stock Market Cycles update for Monday, March 16th. Peter Eliades with you. This is serious, folks. I know a lot of people claim that those of us who call for much lower prices in the stock market are sensationalizing and trying to attract attention or whatever. Hopefully by now, those of you that have watched us for several months know that we attempt not to sensationalize, but we attempt to give you the numbers that our projection software gives us. And for example, quickly, this chart that we're looking at, the moment that this area was closed below, right around here, we had a good indication that prices would come down at least this far. And it doesn't look like much on the chart now, but we're talking about huge chunks here. This is 200 points in the S&P, each one of these horizontal bars. So almost 10% for each one of these horizontal bars. Not sensationalizing at all. And what we're going to show you today, I believe, is very important and may appear sensational, but it's what the cycle projections are telling us. So the logical question when you see something like this is, well, we've just met that projection, so now I guess we can turn around. The whole quick bear market is over and back we go again to new all-time highs. How do you know whether you're going to stop at the top side of the projection or the bottom side? Well, the bottom line is you never do. There's just so much information that projections can give you. They're not an exact science. They tend to be scientific, but not an exact science. So, one of my answer to that question, how do we know whether to look for the top or the bottom side of the range, is we tend to look at other indicators to see if they can give us a clue as to whether the projection will be satisfied at the lower end of the range or the higher end. If we just look at this projection, which, as we said, 2106.97, 2378.31. That's the upper side of the closing projection. We closed today at 2386.13. That's basically at the upper side of the window. So we need to do further examination, however, and that's what we're going to do today. One of the indicators that we don't too often look at, and we probably should look at more often, is the QQQs, the NQs, those indicators that relate to the Nasdaq 100. The Nasdaq 100 are the top 100 capitalized stocks. I believe they go by capitalization on the Nasdaq. And so they're very important stocks, the apples of the world, stocks like that. So the next thing to do is to take a look at what kind, if any, projections we're getting from them. So we can go to, let's start with a nominal 78 to 80 week projections, which are given to you by 189 to 194 trading day offsets, or 39 to 40 week offsets on a weekly chart. And that's what we're going to look at now. This, my friends, is a scary chart. This is the index itself, the Nasdaq 100 index. And today was potentially a very critically important day. It broke below the 189 to 194. The 189 is the broad red one. The 194 is the dashed or dotted red line here. You broke below them. Now, if we had done that back here, there'd be a chance that we have not yet gone below this low, and so you could have been saved by just coming down to this level, which they did today, and then go up again. But this is behind us now. These offsets are behind us. There's nothing in front of us in terms of the offsets that will allow you to come down to this level and turn around. That doesn't mean that we can't get an invalidation over the next several days or next week or two, but boy, it would take one heck of a rally. If we rallied back into these levels up here and got above both of these lines, that would invalidate the projection. Not doing that, however, keeps the projection very much in effect. By the way, this would be a move of 7, 8, 9, 10% to the upside. Now we've been moving in chunks of 5, 7, 10% up and down, it appears, so that's not impossible. But with this kind of underlying atmosphere and with a few of the technical indicators we'll tell you about in a few minutes, this is a very unlikely move up here. We won't ignore it if we see it, and if we do see it, it means that these downside projections are not, have been invalidated. Remember, when a projection is given and confirmed, as this one was today, this projection was just confirmed today because we went below all the offsets between 189 and 194 days on a closing price chart. Once it's given and confirmed, there's only two things that can happen: invalidation or meeting the projections. And look at these projections. 4805.82 to 5308.97. Those are huge downside projections. They would represent the declines on the Nasdaq 100 of 45.3 to 50.6% from this high. Now, this high occurred on February 19th, same as the S&P. We're talking about not even a month ago, and we see the possibility of a 50% decline, either within a month or within perhaps a few more weeks of that. Again, because this projection has been given, doesn't mean it's going to be met in the next few days. If it is met, it could be met out here somewhere, the end of April, beginning of May. We don't know from the projections when they're going to be met. So that's something to keep an eye on. But this is a dramatically lower projection, and you've got to pay attention to it. The only way it can be erased is if you get back above these levels right here on the Nasdaq 100. That's very important information in the stock market, and I can't overemphasize that. That tells you how critically important a situation we're in the economy, in our nation, in the world, and in our markets. And I don't want to be sensational about this, but this tells you what could well happen over the next few days, over the next several weeks. Now I'm going to show you, or I'm going to talk to you about some technical indicators. One of my favorite technical indicators, I think I've said this before, has been the trading index, ARMS index. It gives you a general feel for whether people are attempting to buy a dip and a decline, or whether they're throwing the towel in a decline. And we have very strong indications now that people are not throwing the towel in. The 5-day average of the trend, the last 5 days, which has been, we won't say dramatically lower for 5 days, but it's 1, 2, 3, 4, 5. Starting from up here, starting from this high, the next 5 days would show this dramatic decline. The 5-day average of the trading index is 0.75. That's remarkable. That shows very little tendency to throw the towel in, and it shows people buying the dips. What trend measures is buying up and down volume versus up and down stocks. So if you had an equivalent ratio of up volume to down volume as you do up stocks to down stocks, then the ratio would show you, it would come out to be 1.00. But the more people tend to buy, the more the buying pressure is when something happens. In other words, the more sentiment is to the buy side, the less the trading index will be, and you'll see readings 0.90, 0.80, 0.70. Today's single-day trend was 0.57. 0.57 in one of the historically greatest market declines in history. So either there's something wrong with that indicator, or this is giving us very important information. And when you know that, in concert with what you're looking at here for a potential projection, it's time to be very worried about the market, about our economy, and about our nation and world. And again, I hope I'm not trying to sound spectacular here overdoing it. But I'm just telling you what the cycle projections are showing us. The picture could change in a few days. We get above here again, you're looking at a completely different picture. But until or unless that happens, this is what we're looking at, folks. And this is a dramatically lower projection in the stock market. So that's what we're looking at now. As I say, it could change in the next couple of days, could change tomorrow. But until or unless it does, the red flags are waving, and they're waving and unfurling high in the sky to be careful out there. Okay, that's it for now. If you haven't subscribed yet, please do so, bottom right. Once you subscribe, click on the bell. You'll be notified of any special updates that we do. Thank you very much for watching. Take care of yourselves out there and stay away from the coronavirus. Thanks for watching.